The biggest challenge facing artificial intelligence might be chips, it might be copper, it might be electricity. But perhaps it's something much more mundane: money. Yes, AI companies are now competing not only for chips and data centers, but also for investors' money. And I think this is where the most interesting part of the story begins. For the past few years, whenever we've talked about artificial intelligence, we've been hearing the same things over and over. New data centers, more GPUs, more electricity, and, of course, billions of dollars in investments. But all of this needs to be financed, and companies are taking on more and more debt to do so. According to Reuters, major tech companies like Amazon, Alphabet, and Meta issued approximately $220 billion in bonds in 2026 to finance their AI infrastructure. That's more than double the level for all of 2025. So as AI investments grow, so does borrowing. Now, let's consider something very simple here. What happens if everyone starts asking the bank for money at the same time? The cost of money goes up. A similar situation could arise in the bond market, because it's not just tech companies that are borrowing. Governments are borrowing too. Energy companies are investing. Infrastructure companies are investing. And now AI companies are also seeking hundreds of billions of dollars in capital. So everyone is competing for the same investors' money. I think this is quite interesting, because AI is no longer just competing for chips. It's not just competing for electricity. It's not just competing for copper. It's also competing for capital. And that comes at a cost, because when investors take on more risk, they demand higher returns. This can make it more expensive for companies to borrow. So why do AI companies need such large amounts of money? Because AI infrastructure is incredibly expensive. Data centers, GPUs, electricity connections, cooling systems, energy infrastructure. All of this means spending billions of dollars before an AI model even starts running. According to JP Morgan, total capital expenditures by major tech companies could reach approximately $700 billion by 2026. And this naturally leads one to wonder, will these investments really pay off? Because right now, everyone is investing in the future of artificial intelligence. But we don't yet know how profitable that future will be. That's where the risk lies. Moreover, this isn't a story about weak companies taking on debt. We're talking about giants like Amazon, Alphabet, and Meta. But when you take on debt, whether the investment succeeds or fails, you still have to pay back that debt, and high interest rates can make that even harder. What's more, Wall Street is now getting more deeply involved in this story. Nvidia's agreements with major financial institutions to finance its AI infrastructure are a key indicator of this. So AI is no longer just a technology story, it's increasingly becoming a financial story as well. And I think this is where the real question arises. Perhaps the biggest bottleneck in the AI race won't be a chip. It won't be a mine. It won't even be electricity. Perhaps it will be finding enough cheap capital. Because building the future of artificial intelligence requires an incredible amount of money. And that money has to come from somewhere. From companies, from investors, from banks, from bond markets, and ultimately, perhaps from all of us. Because in the financial system, money is never truly free. Someone borrows, someone lends, and someone ultimately bears the cost. So far, we've been talking about how smart AI will be. Then, we talked about how much electricity it will consume. We talked about how much copper it will require. We talked about how many chips it will require. Perhaps the next question is much simpler. Who's going to pay for all of this? Because the AI revolution requires not only technology, it also requires a massive amount of capital. And if money becomes more expensive, the pace of the AI race could slow down. Perhaps the most important indicator of the future of AI won't be a newly released model. Perhaps it will be the bond market. Subscribe to EcoVantage report for the real economic stories behind the headlines.